Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to use the trade history and time and sales tab to find a trade. Matt, do you want to share a screen and get us started by going over our current positions?
Will do. Although we don't have any current positions because we took last week off.
That's right.
I was traveling, beautiful California, but back for the holidays here and ready to go.
All right.
All right. So, yeah, why don't we start off by finding an interesting symbol in the largest trade. So I'm in the dashboard, go to market intelligence. We have top movers here. Sometimes it's interesting to see what's going on over here. It looks like a Rumble. Wow, Rumble's way up. That's good for me. We could look that way, or we could look at the largest trades today. Why don't we do that, since we're going to be looking at trade history and time and sales? I think this will be interesting. So I like to sort by contracts minus OI. That's the number of contracts that have traded minus the open interest. So that seems to be the opening trades. So they aren't there. You good on that one, Tyler?
Yeah. So the contracts we log when we track how many contracts were traded, and so that's kind of what that's measuring against the open interest. So those are trades that were made today. They were open today. They were not from yesterday or anything like that.
Yeah, the open interest is only from yesterday and before opening trade. So that doesn't update during the day. That only updates at night by the Option Clearing Corporation, the OCC.
That makes sense.
So it looks like they sold this put. They sold it for 11 cents. It's a $6.50 stock, so it's pretty small. The SMV, or R value, is 12 cents on it. So they had to pay through that. And the current price, it's been up from there. So they sold for 11. It's now 13. So they're down 30,000. Trade amount is that the premium times the contracts, and the dollar delta, which is the price of the stock times the delta, is $1 million on the long side, since they sold the put. So should we dig into that one?
Yeah. Although I'm curious, that a lot of these current, you look at the current profits, a lot of it's in the red.
Yeah. Often they'll pay through the SMV price. So they'll have to give something up in order to get that. So that's an interesting sign. You're right. So let's click on this, and that'll pull up the trade, so we can analyze the trade in our trade and analysis tool. So it's Bumble, which is up 1% today. The 6.5 strikes have 40 days to expiration. You could change the ratio there if you wanted. So the price that if we sold it, now it would be getting 12 cents, which is 2 cents away from the bid, 3 cents away from the ask. So we put it either at the mid, or if there's no mid, we put it slightly towards the natural, or in this case, the bid. If we were buying, the natural would be the ask. So far, so good, Tyler?
Yep.
So again, the SMV is right on now. And the delta in it is 15. Implied volatility is 60, now 62. Delta is 15. So, and we could look, yesterday it was almost exactly this, or it was the same price. Exit alerts is something else that you add in once you trade it. And then we'll scroll down. So we have a distribution edge of 22%. We only think that's worth 4 cents. and the distribution. So the distribution is something that we make using actual Bumble stock moves historically, and we put them in the buckets, and then we count what percent that is, and then we see what the profit is at each bucket, and we calculate an expected return, which is the percentages times the profit at each node, and that gives you expected return. And that, if you total all those up, it's 4 cents. We'd be selling it for 11, so we'd sell it for a credit of 22% on that one. However, a forecast, we make a forecast of Bumble based on historical volatility, et cetera, and that has an edge against us. So let's just look at the trade builder on this to explain that a little bit further. So one of the big things that we look at in our forecast is the historical volatility. That's in magenta here. So historical volatility in Bumble, has been somewhat high recently, and so that probably factors into the forecast amount being slightly higher than the implied amount right now. Does that make sense so far, Tyler?
Yeah. So that if you look on the chart there, it has that sort of a heat map. It's kind of going from red to yellow. Can you explain a little bit more about what that means?
Yeah, good point. So that heat map looks at our forecast. It looks at other things like slope, and it and then it creates a value. So yellow, or up here, is about fairly valued. Red, which is down here, is slightly overvalued for this heat map.
Yeah.
So so that would tend to suggest this is overvalued. And what I see here is, if you look at Bumble, it's been down. It was up around 14 for a while, and then it had an earnings here, and it fell quite a bit. And its last earnings, the one before last, the last earnings looked a little bit more positive, and so now this investor has said, okay, well, I'm going to sell the 6.5, and if it hits it, I'm happy to buy it there potentially, but it's kind of in a nice upward channel, which something that I like to look for as well. Any other thoughts on this, Tyler?
Yeah, there's a lot you can learn from the trade builder. Kind of when earnings are and the IV versus HV below. We can even add our own custom indicators below this graph. Like if we wanted to look at slope or contango or anything like that, we could add it there.
Yeah. And another thing that comes to mind on this is the kind of the implied volatilities of these months here. So, what you see is that this last implied volatility reading, where my let's see if I can go down a little bit. Well, where my cursor is, and oops, actually, what I'll do is I'll draw it this way, holding the shift key. So that's where we're drawing the 30-day implied volatility at that point. So I'll press escape, but you can see that some of the front months are well below that amount, and then after earnings, the vol goes up to somewhat like 60 or something. So this presents an interesting show of, like, this is called contango, when the front month is below the back month. But I don't see a whole lot of opportunity here. I mean, to me, selling this vol is, we see conflicting theoretical value numbers, and I like the fact that it's in an upward channel, but there's also a downward channel coming onto it. So I think something's going to happen here. So yeah. I wouldn't be that excited to pile on. So I would pass on this one and probably go back to the market intelligence. Or what we could do, since we saw Rumble, let's just take a look at Rumble. Rumble's up 97% today. let's see why, if there's anything in our news feed. December 23rd, Rumble's ripping higher. What's going on? Announce an agreement. All right, what is the agreement? Tether plans to buy shares in it. Huh. That's interesting. So the reason it's interesting is Tether is, I don't know a whole lot about it, but I think it's kind of, I worry about Tether, let's say, as a crypto. So anyway, that it's still quite a move for Rumble. Do we want to fade that move, or do we want to be on that move with it? It's hard to get in the way of this, but look at this volatility, Tyler.
Yeah, that's pretty wild.
Jacked. Let's just,
what would be interesting to look at here is in the time and sales we can look at. Historically.
Actually, really good point. Let's see if anyone knew about it. So let's go to time and sales. So I click on time and sales. It keeps Rumble in the live. Now this is today, of course. So today's people are still getting long, right? And long, some lucky soul bought at 10, around $10. These are long deltas. These green upward or green triangles. So let's see, like Tyler, let's see if anyone knew anything on Friday. So traders are very long delta on Friday. And so what was going on? Someone bought a straddle, 5,000. So there's one big straddle purchase. Interesting. That isn't the play that I would do in order to get long, but it looks like right near the end of the day, there was a lot of buying going on here.
Could be that they thought something big was coming up.
They kind of, and it looks like they didn't really figure it out until then. Look at all these dollar deltas right at the end of the day. Long call spread, long call spread, long call spread. So they're buying the 7, selling the 15 calls. It's almost perfect, right? So what they're right there. So that, but it's so small that it's a little bit hard. And I suspect if we looked at the day before that, so the 19th, we won't see too much neutral. Yeah. So I don't think there was too much slippage of news. That's my opinion. But people are still getting along. So actually, there's not a whole lot going on in there. Just a lot of small trades going on. So I don't know. If anything, I'd be kind of a little bit more of a seller of volatility. This 200 vol. You could look at like the 20 call in January. It's $1, but what are you going to do against that, right? So the 22, you're only going to get 15 cents for that. So I don't see a ton to do here, but still a very interesting move in Rumble. I happen to be long Rumble in my retirement account.
All right.
I was a watcher of Rumble, and I think I bought it about 5. But anyway, so I'm pretty happy about that move. Let's go back to intelligence and see if we see anything else jumping out at us. Tilray, it's only $1 stock. Let's go back to the largest trades, see what's going on today. And again, I like to go contracts minus OI. XSP, there's a long put diagonal. So what are they doing? Let's see. So it's a diagonal, kind of getting short. So this is an interesting way to get short. They're buying underneath the market and they're selling to get a little bit of premium, which is a little bit odd. They're selling a 5-day against a 61-day. So I don't know if I'd be that crazy about that type of trade. I do like the put calendars, Tyler, if you want to get short, but I'm not totally behind that. Here's a short strangle in VEL. Never heard of VEL. So this is kind of a cool metric over here too. It shows the number of contracts divided by the average 20-day. So that was a big trade versus what it normally trades. There was no open interest on it. They came in selling a strangle, and they sold it for $225 in a year. I'd be, yeah, I don't know that I would do that unless they think there's a takeover coming. Let's just take a look at this one. So VEL is Velocity Financial, real estate financial company. You know, you could tell by kind of the look of this, it doesn't trade very much. And that seems like a cheap vol. I'd be more of a buyer of this, but it looks like there just aren't that many. There's very little open interest, so I don't like to play in these types of stocks. But that seems pretty cheap to me. I wonder why someone would do that. Potentially an overriding that's long, but I don't see much reason to do that, especially with the stock down today. So I'd be more of a buyer of that, but I'm going to stay away from that one, Tyler.
Yeah, that makes sense. There's a lot of these you can't really tell exactly what it's the intent was.
Yeah. So let's see. XLV. So they're selling a straddle 4,000 times in January. $21. That seems rich. Is this January? Yeah. Oh, it's in the money. So it's $20 in the money. So it's really, yeah. So let's just take.
And why would somebody sell an in the money straddle like that, expiring in a month? Like, what's the why would you make that kind of trade?
Yeah, I mean, all you're really doing. So the stock's 137, way above. It's probably not going to get down to 117. So all that trade is doing is there's no, like, I don't know why they would sell that put, because the put's worthless. So all they're doing is selling a call there. They're just getting short. And I have no idea why they would sell that put. You know what I mean? Like, unless they had the stock and they were doing some type of a conversion, but it doesn't look like it. So again, a weird trade like that, I'm not gonna bother with that one, Tyler. So, but it's interesting. But like all that is just selling an in the money call. Again, not sure why you would do that. So here's someone buying a 3M call, selling a put in CIFR. Again, that's a 40-cent, 4.5 put. That might be interesting to look at. So let's look at this in the trade builder. Right? So I think it's really cool how you could click on it and go to the trade builder and have it pop up. So they're saying if this has to stay above $4, and this is the break-even point, this blue line, until here. So it looks kind of ugly to me. That it looks like I'd be maybe getting along at 3, but I wouldn't be getting along up here. So you get nothing for these puts. So I don't see a whole lot there. So I'm going to move on unless you see something here, Tyler.
Yeah, no, I agree with you on that one.
Yeah.
It's funny. It's usually easier to see something in this table.
There's not a lot going on. We'll keep hunting and pecking. All right, so here's again, here's 3 times short put, another short put. Oh, that's Bumble. So look at this, two big trades in Bumble. Same. So they did it twice today. So they're really selling a lot of those puts in Bumble. VEL's 12 times. That's the straddle. CIFR selling that put, and then here's AutoZone. I think they just moved out of California, so I'm a fan. All right, so let's see what they're doing here. Oh no, sorry, this is AstraZeneca. Okay, forget what I just said. Okay, so this is the type of thing I like to get long. So you got a nice trend line here that it's bounced off. It looks like it's breaking through this downward trend line. So let's find, and it looks like the calls are pretty cheap. So let's, and in this one, however, they're getting short, but I'm gonna ignore that one.
Okay.
I'm gonna find a long. Actually, you know what we should do? Since we're here to check out, we're here to check out time and sales as one of them. Let's check that out. So I never look at these like. It's always like a flex trade doing something strange on whenever you have too many symbols or too many options trading. Mm-hmm. So here's that long put. They're getting short, and it's again unprofitable, just like we've seen so many times today. And let's look at historically what's been going on. So they were very short delta at 64, 65, and now it's 66. So the traders aren't doing too well in this particular stock. Let's look at the 19th. Very short delta at 64. So we're going against these traders. Tyler, how's that?
All right, I'm down to try it.
All right. All right. So let's go check the trade builder out. Again, I'm and we could do so I'm liking these. Yeah, I mean that's pretty cheap. It's just we got the 70s. In green there for a not too expensive price. So I would just, I'm not going to do a spread or anything. I think we just go naked long on these and take a shot because, again, there's some gaps. These are all technically interesting. So we could get it up to 75, so I would do this trade. So let's just, let's put it in and we'll force it. Oh, first of all, let's do it in our paper trading account. Let's force it. And so we'll buy that. And then we'll, I only care about, I only care about getting out. Like, so I'll set an alert. And I'll just set an alert. I'll just add a trade alert, and I only care on this one. I think it's going to go. I want to at least know it 200% or die on this one, Tyler.
Yeah, I mean, I think that's fair given the kind of a home run.
It's a shot because you don't want to like get out at 25%. This is one of the ones that you could likely lose.
Mm-hmm.
Delta, if you use that as a proxy for the percent probability of being in the money, it's only 1 in 5 shot, 20% chance. So T-Hub, we're taking a shot. I like to put a note on why we're doing specific trades. So I'll submit that, and now we have our alert in, and I think that's a good show. Another thing that we will be able to do on this is look at the trade history. So as this trade progresses, you could go in. You could either have it in the trade analysis tab here and see it where it's been, or you could have it. You could go from your positions and watch the trade. How it progresses. So this is a really neat tool. In below, you could essentially graph it against the implied volatility at the strike, and then the stock price is down here. So this trade history tab is quite cool, Tyler.
Yeah, it's really cool, and you can see the different Greeks and how they affect the value of the position over time. You can. I want to look at the add option leg and add study up above there, Matt. So
okay, before I do that, here's like if you mouse over it, you could see like at this point, there's that volume right there, that red volume. So it traded, so we had to make a guess if we thought it was a sell here, but like you could see the volume. You could see the volume up above. I'll circle it here. So here's that volume right here. And then, so here's the red part that we're mousing over. So that's kind of neat. You can see what the market was at the time. And so that's a neat thing to see. So yeah, and then if we were going to like add a study, so let's say we want to see what a call spread would have been looking like over this time, right? So that call spread, like right now, let's put it right. If you mouse over that, so right now that call spread is, I only the 75 is so far out of the money, it's only worth 4 cents. So it's the total bid is 4, the total ask is 53, so it's 46 cents, and that's how we get this number here. And you can see how that has moved recently.
Yeah, it's interesting, and you can add studies. So you can add, if you want to look at the bid size or the ask size, like there's a bunch of stuff you can do there. The theta, like look at all the Greeks, and it's really interesting. If you want to like really like study your trade, and it is kind of part of the 4 pillars approach that we do here at ORATS is everything from research to implementation to risk and review. And this is part of the kind of the risk and review step.
Yeah, absolutely. And another thing that you might notice is this green, and what that is where the mid price is compared to the SMV value. So for example, now, right? So we see that the SMV value is here, this column. So we see it's worth 48 cents, and the mid price is 46.5 cents. So it's 1.5 cents of what we would say edge for the buyers. That's why it's green. And so you could see that, this is 36 at 41, so 39 cents, and this is 4 cents at 12 cents, so 9 cents. So it's still within the bid and ask, but we draw a smooth skew through it. I don't know if that would help to see that or not. Why don't we clear that up and just go take a look at January 70.75. So there's that 9 cents, Tyler. And here is that now it's 39 cents. So if we were gonna buy that and sell the 75, we'd be paying, now it's more in line a little bit now than it was when we were looking at it. Now the S&P is pretty much online. But that's where all the data comes from. And the way that we calculate that is, actually, let's do that again. It's kind of a neat thing to look at. So what we do here is we're drawing this orange line, which again, one of the tougher things that I've done professionally in my life is called our SMV smooth line. And especially on a stock like this that has it's pretty wavy, it's actually quite a difficult task. But what we do, I think that's really cool, is we'll draw a circle around the one we're buying, green, and a red circle around the one we're selling, red. That actually looks like a pretty good trade. Should we add that one, Tyler, or should we just be okay with the other one?
I mean, I like adding it. Okay. We'll have a lot to go over next week.
Yeah, so let's add this. It's a little bit wider of a market. We'll pay 34 cents, even though it's only worth 29 now, or 30 cents in the market. So we're giving away a little bit. So we're going to force this, and we're going to we'll go back to that a little bit later. All right. So, and then I think the big thing on this one is that the note that we'll do. In trade alert, we'll say T-Hub, added a sell of the 75s since the vol was very high. So we'll watch that one as well, and we'll put on this one. Yeah, we'll do the same 200%. We'll try it again.
All right.
All
And
right.
next week we can come back and look at the trade history and see how it did.
That's a good point. So next week we'll be able to come back and check out that, if I click the trade history, this trade is in there, and we'll be able to see how it did when, this is the high point, this is the low point, and track all that. So yeah, it's a good point, Tyler.
All right. Well, looking forward to it. I think that's about wraps it up for today. Thank you, Matt.
Yeah. Thank you, Tyler.
Yeah. And thank you, Tradier, again for hosting us. If you guys have any questions, feel free to leave a comment in the YouTube video, or you can email us at support@orats.com with any questions or feedback you have about our tools. Well, as always, we'll be back again next week, and we'll see you guys then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.